Hello, this is George, and I just wanted to introduce the second book in the Easing Into EasyLanguage series. This is the high-res edition, and I wanted to show you a quick excerpt from the book, and this is tutorial 20, and the name of this tutorial is Pyramiding the Camarilla Equation. In the book, you get this workspace that you see in front of you. And you get the strategy that is producing these trades as well. And this is plotted on a 5-minute bar. And it's not easy to program this concept of interacting with the different levels, the resistance levels and the support levels, and keeping track of the number of trades and where you took those trades. Because in this particular algorithm, I only want to execute one trade at each level, be it a resistance or a support level, and I only want to take 4 entries in one day, no more. And I want to be able to incorporate a profit objective and a stop loss. On this day, this particular market action produced 4 winners. This doesn't always happen. It would be great if it did, but it doesn't. But it's a good day to exemplify or show how this thing interacts with the Camarilla equation and the levels that are derived from those equations. And so you get this indicator in the book, and you get, like I said, the algorithm that drives these trades, and all that information is divulged in the ELD, the Easy Language Code. So in this algorithm, I wanted to short resistance 1 and 2 as the market penetrated those levels, and I wanted to buy support 1 and support 2 as the market crossed those levels. And I wanted to do this on a limit order basis. And it's very important that you keep track of your path. And I go into great detail. There's 2 videos actually on this particular tutorial, how to keep track of the path that the market has taken in relation to the levels. That path is your track record of where you've been, and you can go in there and look at that track record, and if the market crosses that certain level, you can say, hey, have I been to this certain level? And if I have I taken a trade? And if I have taken a trade, I don't want to take another trade at that level. And so let's work our way left to right on the chart, and we'll do this very quickly because this is a very introductory video to the high-res edition of Easing Into EasyLanguage. I just published the book. There's a paperback version, and there is also an ebook, or a Kindle version, I guess I should say. And of course, there's all this supplemental material that goes along with it, just like the Foundation Edition. It's located on www.georgepruitt.com. So let's do this real quick, and I'll show you how this works. I won't show the easy language because you can get that in the book, but you have to work your way up to that tutorial 20. I started at tutorial 14 because I had 13 tutorials in the Foundation Edition, so I wanted to keep that numbering scheme intact. But you do have to work through the tutorials. I think I started at 14 in the high-res edition, so you can work your way up to be able to program something similar to this. A lot of people could sit down and say, I could draw these trades on this chart, and I could execute these trades manually as the market happens, but you couldn't backtest it. And that's the most important benefit of Easing Into EasyLanguage. The series is to be able to take your ideas and properly and accurately backtest them. And it's more important to do that, and that was my whole objective of Easing Into EasyLanguage. More so than automating a strategy. Is this strategy, can you make this strategy automated? Sure you can, because it's a .d session. You just want to sit in front of the screen and monitor it and make sure it's taking the trades properly. And I discuss what automation is. It's not unattended trading, but it's kind of trading that the computer is actually taking all the trades for you, but it's something that you have to monitor. You have to be in front of your screen, not every 30 seconds or even every minute, but if you can look at your chart, several times during the day and make sure that the trades are being automated as they're supposed to be, then automation is right up your alley. If you can't do that, if you can't check in on your algorithm throughout the day, then I wouldn't turn automation on. I'd let a system assist broker take over the reins of the algorithm for you. But let's get back to this algorithm. This is pyramiding the Camarilla equation. We have, based off the formula, resistance 4, resistance 3, resistance 2, resistance 1. You have support 1, support 2, support 3, and support 4. Now, according to the Camarilla equation, these numbers are derived from the prior day's activity. And then they are projected on today's activity. As you can tell, they're horizontal straight lines. They don't move in with today's action because they're already predefined on the first bar of the trading day. But according to the Camarilla, you'll see reversal points at these resistance and support levels. And in this case, they really did work. They're not exact. Nothing's going to predict a market turning point right to the price. But this one, it seems to be, and I don't know if it's a self-fulfilling prophecy that a lot of people using this Camarilla equation, but it seems on many occasions the market will turn at one of these levels. So let's start with our first short trade here. The market opened here and it went down first. And in this equation, I do tell it to ignore a certain amount of time right after the open because I'm filtering what I consider the noise out. A lot of people would not consider that noise, but I do. So this equation, this algorithm comes in the form of a framework, so you can monkey with the inputs. In this case, I'm ignoring, I think, the first 15-minute bars. The first 3 5-minute bars or 15 minutes of the trading day. Okay, and once the market starts penetrating these levels, I start putting limit orders in to sell on these reversal or resistance levels. So after the first 15 minutes, I put a limit order to sell at resistance 1, 2, or 3. Okay, and you have that capability with the framework to select different support levels to reverse at, or to initiate trades, I should say. In this way, in this format, the framework is only doing counter trend trades. You can incorporate a breakout trade with it, and I show examples of how to do that in the book. But what we're doing now is just reversal trades. So after the first 3 or 4 minutes, I put a limit order in to sell short at R1, R2, or R3. Well, the first thing it does, it experiences after the time delay has occurred, is it experiences resistance 2. So there's a limit order, it goes in at resistance 2. In my limit orders, I force the trade to trade through the limit price. It's not a market if touched fill, it's a penetration fill. You don't want to really fool yourself by using if touched limit orders in your back test, because most of the time, I'd say 90% of the time, if the market touches your limit price, especially in futures. Now in the stocks, it may be a little different. You might have a higher frequency of election of a limit price, limit order. But I know in futures, I've had extensive experience with trading futures, and 9 out of 10 times, if a price goes right to if the market price goes right to my limit price, I don't get filled. I have to go one tick through it. And so in my back test, TradeStation has that capability to add that feature that says, okay, don't fill this order unless the price does actually go through that price by a tick. Okay. So, and if it does go through the price by a tick, you will get your limit price. You're not going to get a tick better. So the first thing happens, like I said, after the delay, I cross above R2. And this algorithm is saying, I want to take 4 trades a day, at most 4 entries, and I want to interact with resistance 1, resistance 2, resistance 3, support 1, support 2, and support 3. So the first thing we do is we encounter R2, so we put the limit order there, and it went short. And then the market comes down to R1, and you're thinking, Why didn't it not fill that order? Well, I'm entering on limit orders. So if I'm here and I sold on a limit order, if the market, because it was above the market when I placed the order, down here it would not be a limit order, it would be a stop order. So what I'm telling it to do is it's got to come back up through the resistance level before it can be filled. So what happens is the market penetrates the R1, comes down here, and then it does rally from below R1. But the way I look at it, and the way I programmed it, and you can do it your own way because you have the code, is I want the high of the prior bar to be below the level that I'm shorting at, and I want it to be above the level where I'm going long. So the first time that we have a high below the resistance level is right here. So once that high is below that resistance level, then I place the order on a limit price to go short at R1, and lo and behold, we were filled right on the very next bar. So the market goes down here, and then I say, okay, I need a low to be above my support levels to go long. And that low is above my support point, support 1. So I can put a limit order in at this level, S1, to buy. And on the very next bar, it does it. So we cover the first order, the first entry, first short entry. We cover the second short entry right here. So those are two winning trades. Okay, so I'm still allowing for one more entry. I've had 3 entries. I'm keeping track of the entries, and I'll show you how to do that. And I'm saying, okay, I want to, since I've already executed at S1, I'm going to execute at S2. And I only want to do that if the low of the prior bar is above S2, and we have that right here. All these bars, lows, are above S2, so I put a limit order to buy at S2 right here. So there's 1 entry, 2 entries, 3 entries, and then finally 4 entries. So the order generation engine is turned off because I've maxed out the number of times I can go long and go short, or the number of entries I can take during the day, which was 4. After this point, what I do is I go in there and I say, I either want to be stopped out on my last 2 long positions, or I want to take a profit off those long 2 positions, or I want to get out at the end of the day. Okay, so fortunately in this case, the market kept going down. So you're long here, you get in at a better price, you're saying, okay, this is okay, I can deal with this. And then it even goes down further to S3, and you're saying, okay, where's the magic of the Camarilla? When did that come into play? Well, it came into play within 5 minutes, because look, it bounced right off of S3. It rallied throughout the rest of the afternoon, all the way up through here, and it starts having some congestion, starts pulling back, and you're thinking, gosh, I wish I could get out of this thing. It almost hit your profit right here, but it missed it by a tick. And I'm using the same process, penetration, on limit order on the profit objective as well. So it may have touched your limit order here to get out on a profit, but it backed off of it, backed off of it, backed off of it, and you're thinking, gosh, I should have got out. But you're saying, I'm going to stick with the system because that's what I'm supposed to do. And then the market rallied throughout the end of the late afternoon, actually closed near its high, and you got it with a nice profit objective. Now this strategy is rather complicated, and there's some restrictions in here that I put in there just as educational material only. And you can go in there and you can, play with what I've got because it is a framework, or you can go in there and once you learn how I did it, you can go in there and change the code yourself. Here is the Easing Into EasyLanguage High-Res Edition. This is the paperback version, $29.95, and the Kindle version is $24.95. I don't know what your preference is. I know some people like to have the Kindle version. Some people like to have a paperback version. The Kindle version, when I buy a Kindle book, such as something like this, I will go in and I will actually use an app on my computer, and I read the Kindle version on my computer. I'll have it on my Kindle as well, so I can do background reading while I'm away from the computer. But when I'm on the computer, if I want to copy paste, and you might be able to do that with the Kindle version, I give all the source code in an ELD, so you have that. You just load it right into your TradeStation. If you want to program like I did through a video, the 5 hours of video that I provide, I've got a text file that you can just copy and paste the code as you go. So I think those are good methods for learning how to program in EasyLanguage, especially at this point. If you can get through the high-res edition, I would consider you an intermediate EasyLanguage programmer because you've switched from the daily bar paradigm to the intraday bar paradigm, and you'll see the limitations of EasyLanguage when you're using data 1 as a 5-minute bar. The concepts and ideas or the programming, the concepts may seem simple to translate, and they are, but the programming is not. So it's very important that you understand that there are two separate paradigms to trading or programming in EasyLanguage. So that is it. That's if you want to go ahead and pick up your high-res edition, go right ahead. And of course, if you have any questions, you can always email me at georgepruitt@gmail.com, or go to my website and leave a contact or whatever. But you can get in touch with me in many different ways. And I appreciate you taking a look at this video, and I hope you do buy the book, and I hope you learn a lot from it. And I'll keep checking back at my website because I'm sure, because there's a ton of source code, I'm sure there's a bug or two that I didn't see when I was writing the code, and I'll be updating updates to bug fixes, and I'll also update some of the strategies just to make them, if people are having problems understanding them, I'll go ahead and see if I can create some more supplemental material to go with those. Okay, you have a great day. Thank you.